Good morning. Welcome to today's recap, and it's a new month as well. And this is what exactly we have been waiting for on the monthly price action to know exactly where we are going to and the next line of action. Now we are seeing that the monthly candle are closed like this. Something that looks like a morning star, which means that we expect price to go higher, at least to do these A, B, C, like minimum of 100 extension to the upside, but not immediately. Like I said, we should be expecting a bounce back or a reaction to the downside because we felt like we have completed a structure to the upside, and then the seller should come in for correction. And that is what we are seeing. But where is it going to get to? And what are the possibilities that this is going to give us? And that is what we are about doing together now. Now, we have the structure on the monthly time frame. And so which means that we don't expect that the price, being a bullish market now, is going to break low from here, which is we don't expect price to test 1.05728. But that is ultimately 1.05728. It's a place that we don't expect price on the monthly support. Now, of course, you don't have to wait to that point before you know that, something must not happen. So let's turn to the weekly support. So the weekly support will now be at this level, so which we don't expect price to break. So this weekly support is here at 1.0840. 1.0840. That's where the weekly support hits. So in between the monthly support and the weekly support, this is a top place that price, we don't expect price to even violate 1.0800 at all. Price should not even violate that at all. It's a weekly support. The daily support now may not work, okay? We can see this structure here as a possible 1, 2. This is a 1 from here to this point is a 1 and a 2, and probably a 3 here, a 4, and a 5. So we have completed this broccoli on the weekly time frame of a 1, 2, 3, 4, 5, which is the first wave. And we should have an ABC correction to the downside. And now the way it's giving us the sign that we may actually be pulling more lower to not to break this point. So what we are saying is that we are looking at price falling from this tip to this base here. That's a possible 329 pips. Don't go and quote me that price is going to fall 329 pips. That is the possibility. But what the price is going to do is what we have to figure out, okay? So we are seeing the monthly support, the weekly support. So the monthly support is where we don't expect price at all. And the weekly support is what we should know that if indeed we are in an uptrend now, price should not break 106,840. If you go to the daily, I need to start this way for you to understand. So the daily has nothing to give us really in terms of the bigger correction that we're expecting, because the daily support would actually be at this level. At this level. In fact, it's not even at this level. So we are breaking some daily support like inside this correction. So we can only turn to this support here of 5, because this is like and A, B, C of the fourth wave, and this is the fifth wave to the upside. Now we are correcting an ABC to the downside. Okay. Now let me bring those drawing. Of course, this is 1, and this is 2, and this is 3, this is 4, and this is 5. So we have finished that broccoli. Let's go to the 4-hour time frame also, because that is where I'm going to begin to teach you something. On the 4-hour time frame, this is how it looks. Right from the bounce here, this is a 1, and the base here a 2. This is 4 of 3, and this is 3 with 3, and a major 4, and with 5. 1, 2, 3, 4, 5. And now we are seeing a correction to the downside. So, and we must make sense out of this correction and what we're likely to going to see. Now, the way and manner this correction had come down shows that it's most likely going to give us a deep correction. So it's going to most likely give us a deep correction. Let me bring out my drawing before now, this is my drawing now. Looking at this drawing, this here is the monthly support. That's the monthly support where we don't expect price at 1.0557 or thereabouts. And the next here is the weekly support, which is at 0.840. Here is 37, so it's almost the same. So we don't expect that price is going to break this. This is a tough place for price to even cross. Between here and here is a tough place because we are bullish now. So we expect that price may get to the fringe of this area now based on the structure that price is cooking. Now, could price have ended the correction here and turn up and begin to go bullish again? It's possible. It is possible. But the answer to what price is going to do now lies here. Let's look at it. Because we are saying this as an A, B, and a C. Yeah. It's turning to be an ABC to the downside. But in terms of an ABC, it has broken the structure of a C that we should expect, because if really we are frankly correcting shallow, it shouldn't go beyond 161.8, and which price has done that now. From this top to this green, which is A, that's the second portion, to B at the green. So 161.8 is here. So price had broken that to the downside, which means that this correction is likely going to be deeper. So if it's going to be deeper, so we expect this to run now 5 waves to the downside before we now begin to have a correction of what? Of a B. So it might likely now turn to be a WXY in the O. So the A, B, C may be a WXY. So in this turning to be a WXY, to give us a double correction, there are things we have to also see in our attempt for this to give us a WXY, a W. And for us to have an X, so we are just saying this early now, that what price may likely do. Now, the first thing we have to note is, like, if this is not the end of this W or a C, because it may have done a 3, a 4, and a 5 here, and that we're now going for an X in this move to the upside. If that is what it is, price would have to break a structure for us to know that price now is going to do an X. Now, if price is going to do an X, where would the price, if we are, okay, before I even do all of that, because I have to take it piecemeal now, we are seeing a possibility of a price doing a WXY now. If I go inside of a 1 hour time frame, now go inside of the 1 hour time frame. So all these may be seen as a 1 and a 2, which is as a B. So it's looking like that. We may have seen a 3, a 4 here. At first, we were thinking that this is going to be a 3, a 4, and a truncated 5, and we are pushing up. But now looking at what the price is doing here, it doesn't look like that anymore. So we are going to take this off. So we're going to measure on this as our 2. Now, if this is our 2, and if this is 3 and possibility of a 4, and one more time to the downside for us to have a 5, price should not break here because this is 38. Retracement, in terms of retracement of this from here to this point to this side, this is a structure of 4. If price breaks this to the upside, it means that price is potentially doing an X. So because if we are still within correcting 4, if 4 is not ended here, from here to here, 3, 4, and a 5, it has not ended here, and price gets here, it should go down one more time to finish 1, 2, 3, 4, 5. But from the doji here, the doji here usually represent from here a 3, a 4, a 5. So looking at this here, let me just do something here. So from the 4 hour time frame, if I go on a purple for the purpose of what I want to teach here, it means that most likely at this point here, we had finished the 3rd wave. And at this point here, where we had this red doji form, so this is our 3, this is our 4, and this is our 5, that could be. So in that case, if we turn back to our 1 hour time frame, so inside the 1 hour time frame, we can see that this actually looks like the end of a 3, a 4, and a 5. But then we are saying, in case that is not what it is, that 3 are just ended, because we must know that we have to be more practical. In case, 3 are just ended, 4th wave must not go beyond here before we see further downside, further decline to end this as 1, 2, 3, 4, 5 if it has not ended here. But a breakout of here suggests that we are going to do an X. So, and if we're going to do an X, I'm going to show us something. I've given us an exit around this area, just around this area, just for us to have an exit and look at this structure properly. In case it's going to build up into a momentum, a motive wave again, we should have a pullback to buy. So, but it's safer for us to exit at a small loss for us to look at the price again. Now, let me go back to in terms of what we expect to see, then let me go back to the daily. Now, we're trying to retrace now. At this point of price will be a tough call for price to break, which means 1.09700, around this area, 685 or 700 is where we don't expect price to break for now if we are to turn down to do a WXY. So we don't expect price to break this daily resistance here. And if we turn to the 4 hourly time frame, And this is the 4-hour time frame. Breaking this 4-hour structure here at this point is an early indication that we're actually going up. Here is an early indication that we are going up. So, and where are those levels that I just talked about? The 4-hour structure and the daily structure, they are marked here. So this is the daily structure. Price breaking above here is an indication that price may be going back up. And this is the 4-hour structure here. The 4-hour structure taking, of course, will still accommodate with 4, possible with 4, and a further decline. But a breach here means we are most likely correcting an X. And a breach out of here, which is here, the primary 2, which is the B or the primary 2, will mean that we are back in an uptrend. But from here, once you break the daily structure here to the upside, you kind of begin to think that it's possible that we go up, okay, and that we are back in an uptrend. But ultimately, if really we are back in an uptrend, our price should not break 85 points. So once we take it from here, from where the price is pulling, really, this will now be an area that price this area 85.4 will be an area that the maximum area that where X should fall. So which is almost coinciding with that primary 2 for an X. You know, X could occur between 61.8 and this 85. So we are trying to mark up that we may see a further decline in this zone here to the downside. So if I break this, okay, so between here and here is where we expect X not to pass. So, but once we break here, it's an indication that we may be going up, but ultimately we may have reaction in this zone to the downside, and price will not get here. Price must not break here at all at any given point in time. We are going up again. So, with that said, if we get reaction between here and here, between this zone and this zone, then we cannot have a WXY. Then we can now begin to say, okay, we want to sell from here to go down. And thereafter, we can now pick up our buy again. So that is what we are saying. We shouldn't think that we want to, with this kind of a wave and the way it has gone to the downside, we shouldn't think that, oh, the price is going to go up and break the top now. That is not the structure we are seeing. It's giving us a structure that represents a WXY. So safely, for anybody that is trading, you should be aligning yourself that, okay, maybe this going up could be a possible fourth wave, you know, but around this area, let's exit. Even if it breaks above, you know, we will find our way, okay? So now let's go to gold. So in the same way we analyze the euro dollar, so we are seeing the monthly resistance here. So the monthly resistance is here at 1984, which will be a tough call for price to come and break. So 1984 monthly resistance. The weekly resistance is at, the weekly resistance now is here a bit upper up, which is at 2001. So we don't expect price to come here and break this. 1984 is the first one, if I'm correct, and then this area is the first one and the second one. So that also is March. And the daily, let's look at the daily support. And this is the daily support. So that is the daily support here. On gold, we might not see a push down to take this daily support. Okay. Now let's go to the 4-hour time frame. Before we go to the 4-hour time frame, let me show us something in this structure. Okay, let's go to the 4-hour time frame. This is a 4-hour time frame. In a very high bullish market, let me turn somewhere. I think I can use this. Good. In a very bullish market, we can see that after we had a wave 1, a 3, 4, 5 here, we had this push to the downside. And just like what Eurodollar is doing now to give us this, in Eurodollar is just, in gold is just a simple correction to the downside, and we bounced to break the top. So well, I'm not saying that that is what we should expect from if you come here from the top here down to this base here, okay, that base of the first wave, back to this green, which is the second wave. If you go back there, what do we see? We see that this is 161.8 is really here at this level, but price went down to break it. So we can see probably at the fourth wave here, coincided with that reaction, then a further down decline to make wave 5 here. And so we see this as a 5-way structure, 1, 2, a 3, a 4, and a 5. So because it broke 161.8 to the downside, you might be expecting that this one is going to go up as an X and come down to give us a double, but that never happened. It now depends on what is going to happen to Eurodollar 2. Maybe Eurodollar is going to do the same and giving us this to break below 161.8 to the downside and not do a double correction, and it may still give a double correction to the downside. Now, having said that, having showed you that on gold, let's now go back to our analysis of what we expect that gold will give us. But, you know, that is going to break and going to give us also depends on the internal count or the broccoli or where the wave is. You know, on Eurodollar, we have done 1, 2, 3, 4, 5. We are doing a deeper pullback of an ABC. So because a deeper pullback of an ABC, just like we saw here too, we may be dipping down to a double correction of a zigzag on Eurodollar or not. So we must know that. Now, on gold, we see this as a 1 and a 2. We see this as a 3-1 and as a 3-2. So if that is what we are seeing, let's bring back our drawing here. And we are seeing a 1, we are seeing a 2 here. And inside the third wave is what we are still trying to see and make sense out of it. So now inside the third wave, we've 2 ended here, just like I showed you, and we had a 3-1 and a 3-2. So inside of a 3-1 and a 3-2, for us to have at least a 161.8, 161.8 of extension of 3-1-3-2 is actually going to be here, and we've not had that. Now, because we've not had that, we know that we have finished a 3-1, we have finished a 3-2, And a 3-3 is what we believe that we are doing here. So in case, if that is the case, that we are doing a 3-2 here, then we have to look at the internal count of a 3-3 that is going to also count 5 waves to get to that 161.8 of this extension to the upside. So we see this as a 1, 2, 3, 4, 5 here, and an ABC of 2 of that 3-3. So if this is the second wave here, we are seeing this as from here to here, a 161.8 to at least tell us that we have finished a 3-3. The inside of it, this 3-3, that the inside of this 3-3 wave now. So if we are going to see that from here to the purple that represents the first wave, and here that represents the second wave, that also has not marked a 161.8 here. So, but in a way, it's almost there. So we can still call this the fourth wave of this 3-3 that we are doing and to break up. So, but again, you must know that wave 3 is very tricky, and they kind of do a nest. They do a nesting. They do a 1-2, like a 1-2. They can do another 1-2, a 1-2, and they are pushing up. And it can look so confusing. But the only saving grace is that you must know at all times that the way it has gone up in an extension like this, for it to get to 161.8 is the first thing that you must target, which is at this point. And on the larger time frame, you are looking at this at the larger time frame, and a 161.8 of here is going to be a tough call. But when you are looking at a larger time frame, because we take it piecemeal, you are looking for a 1 and a 2, at least an 100 extension, which is going to be around this area. A 161, this 100 extension here, this is a 123 here, and 161.8 will be here on that, but piecemeal, we want to see how price negotiate and gets to this point first. So it's a long way to go. So what we are calling now on gold is for us to even still finish the inside of this third wave as a 3-3, this immediate third wave, 3-3, 3-4, 3-3-5, now to do a 4, to do a 5, and after that, we can now begin to look at, but this is, it seems gold is going to nest. It seems gold is going to nest. Now, let's look at the structure that we can get here. Before I go there. So here, at this point, is the monthly resistance here. Sorry, support, which is below 2 of these. So we don't expect price at 1984 at all. And the weekly resistance is also here at 2013. So which means that we don't expect price to break here at all now. So any correction should fail between here and here. It should fail, and we should see more upside. Because the broccoli is not completed here at all as 1, 2, 3, 4, 5 for us to have a bigger ABC. No, it's not completed. So in that view, with holding that view, if we see this as a 2, and this is as probably a 5 for now, for us to have a 4 ideally should not go beyond this broken red here. So that is what we are saying. Now, go inside of that wave. Okay, before I go inside of that wave, let's look at price action also in our corrective format. Let's look at price action. So we want to see what price is going to do as we are trying to break up. So what price is going to do as we are trying to turn up. We can't find a reasonable 4-hour resistance here, but the only thing that price is giving us as a 4-hour resistance is probably at this tip of this doji here. Let's look at a daily resistance if we can get that within this correction. Now, looking at here, so the daily resistance will be here. Breaking this is an early indication that price may be going further up. So that's the daily resistance here. So now, with that said, I think I'd mark those levels also. Let's go to the lower time frame to look at that, because gold is pushing up now. So let's bring this drawing out. Okay. So these are the levels. This is the level of 4-hour, and this is the level of the daily. If price should break this daily, we're likely going to be seeing more upside. So this is the first level to be broken at 4-hour and the daily. So these are strong resistance zone for now. If we are going to see further downside, further decline. So once we break out of this zone, then we are bullish again. So that's how to use your structure and all that you have. So let's look at this structure keenly now. We see this as a 3-wave to the downside, a 1, 2, 3, to give us a W, and a reaction at 85.4 here to give us an X. And when we saw this, like I think I had some 4-hour structure to be broken to the downside for me to know if we are going down, and we did break those structures to the downside. And now, this broke slightly below 100 extension. It didn't get to 123. So 123 extension is actually here. And the 161.8 is actually here. So that was why I said at 2022 is 161.8. This is 23. So price just broke slightly below 100. And having said that, there's only like a perfect square that, okay, that's to just touch 100 and that's all. Price may not just break slightly below it. But what are we seeing now? Are we seeing that price is just has completed a WXY? Are we seeing that price has finished this a WXY and price is going up? Maybe yes, and maybe not. But there are things a couple of things we have to see here. Just like I told us, this zone of 2044 and breaking out of 2047, it's a clear indication that price is going back up. And again, that will be further confirmed at this level. Once we break the primary X here or primary 2 here, then we are going up. Now, what are we seeing now? We are seeing these because of the price action on the higher time frame. Let's look at that again on the 4-hour. The price action here, is such that you can see this is A and this is B, or X, A, and so WXY. But the price action here still looks like we may come down and we may not. So I'm not giving you to exit your order. So we are still bullish. We are still buying that. Unlike euro dollar, I'm not saying that you should quit this one. We just need to wait for what price is doing here. The only thing is that if you had picked your order, maybe high up here, you may be trying to find a way of relinquishing it in case price wants to dip further. Now, for now, what do we see? Let me go inside of 15 minutes time frame. For now, what do I see? So what do I see instead of a 15 minutes time frame now? Like we are calling this WX and a Y. So, and I still see some possible corrections here. I still see this one as what? A B, and a C, for further decline. So we maybe have seen a further decline or not, but we are already almost in the zone. If you had picked probably your buy at this point is not too good, because we picked our buy here. You know, at times you begin to think, oh, it's not going to reach 100, it's not going to get there. And you are seeing some funny price action probably around this area, and you took your buy somewhere around this area. You know, it would have grown in some negative. You may want to exit here. So this turn to the upside and this reaction here, because this is like how many waves? Let's see. This is looking like a 3-wave structure. Maybe it's 5 waves, I don't know. It could be a 1 and a 2 and a 3, a 4, a 5. It could be. And this is clearly like the 3 waves to the downside, the 1, 2, 3 here. So which is a correction. And these may be turning to what is more than it may be going back bullish, because this may be a 1 and a 2. Where is a 3? Maybe a 3 here, a 4 here. You may be having a 5 here. So anything that is pushing beyond here now, it's seen as a possible bullish move. So what do we see here? This is within a zigzag complex or complexion. So a zigzag complexion and an 100 extension to the upside will be from here to this point and to this point. So this is 100 here. So 100 extension is falling below the zone, which we call a resistance zone here. 100 is falling below that. So if you have an buy from here, you may close from here. But as we have picked our order from here, let's just continue to watch what price is going to do. And let's see if it's going to make a decision in this zone and turn down again, or it's going up. Now, ultimately, if we are going to have a double correction on gold, ultimately, what we want to see is that price from this low, price may still take this zone, play a fast one on us, but price should not take here. This will be seen that 2049 will be seen as a zone that price must not take for now, if indeed we want to have a double correction. So that is what we should expect. This may still give us an A, B, and a C at 100 and begin to turn down again. So let's watch for what price is going to do, because gold may not give us a double correction. Why? Because we are thinking we are doing a 4th wave of the structure I showed us here. Let me go back to there. So I believe we are doing like a 2 here, a 3, and a 4, and a 4 must not pass here. So if price is going to turn down again, we'll see. But now price is making a bullish move. You can see the way and manner the 4-hour candle is closing. And so the 1-hour candle is closing, it has closed here. And at this point here, you can see, okay, maybe represent like a momentum loss that the price is burning down. So price may just kiss this and begin to give us a double correction. It's not impossible. So if we're going to get a double correction, then we'll now begin to see price breaking 1-hour structure to the downside again. And the first hour structure that's going to bring 1 hour will be this, followed by this. Once price breaks this again here, price is turning down. So we need to know that. But for now, this may just continue, break here, correct a bit, then throw a candle to break all this structure to the upside. So once we get to this zone is a danger zone that is telling you I'm bullish again. From here to here, I'm bullish again. So that's what it's saying. But we are trying to warm up out of the seller's pressure to see what we're going to get here on gold. So gold may give us a double correction, but if it's a double correction, it's still going to be a shallow correction, and that means probably it's going to be like a 7 swing. Which one? This one is 1, 2, a 3, a 4. Then we now have a 5, 6, 7 to the downside, which we should not go beyond this area. I don't expect it to break the weekly resistance here. 2013 should be preserved. But again, from the look of things, we are almost at the point of, oh, price is going to break up. So with that, I've made it too long,